we've talked recently about some other loan products that you have access to if clients maybe have other needs or maybe can't qualify as easily for whatever reason. And as the market shifts, potentially they could make it harder to qualify for a conventional mortgage. So what are some other options clients have?
So a big one recently, and I know a lot of our non-QM investors are pushing specials to try and increase their portfolios of this product is it's called a DSCR, or a debt service coverage ratio. So effectively, we don't even look at income. We just structure it based off of a 0.85 income factor when you take the payment and divide it into the rents. And if it's below 0.85, you can qualify. Obviously, there are LTV and credit score adjustments. So, the rates are going to move based on those, but you can do that with 20% down. And again, you can buy down the rate. There's also an interest only option that turns it into a 40-year loan. The first 10 years are interest only. And then at year 10, it turns into a 30-year fully amortized loan, which obviously is going to increase the payment. But, the goal by then is to either have, flip that property into a different loan or just be ready for that. And maybe the rents have increased enough over that 10-year period where that fully amortized payment, would still cash flow. Or what a lot of people might do in that situation is make an annual payment and recast the loan and actually put money towards the principal, even though your monthly payment is only interest only. So lots of different ways to combat that adjustment timeline, but it gives you flexibility.
What are the disadvantages of doing something like those types of loans instead of conventional? Because it sounds really dreamy.
Yeah, no, the interest rates are a little bit higher. That's been, the primary pushback that people have had.
How much higher typically?
Just to give you an example, I ran some pricing for a client with 40% down. Their Fannie Mae rate would have been 5 1/8, and this product put them at 6 1/8. Okay. So it's 1%, but depending on the loan amount, your interest is still tax deductible. So, it's not going to be a huge difference. I think on $100,000, it was like $70 a month on that rate difference. But it's for folks that would otherwise wouldn't qualify anyway.
True.
So,
good point.
It's just, finding a way.